we've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday.
I'm ready. Are you?
Join me, Trevor Phillips, Sunday mornings on Sky News.
The top business stories live from the Sky newsroom. Step 1, stabilise the economy. Sir Keir Starmer outlines his government's plans to take tough decisions to achieve economic growth. A boost for Aberdeen, the new headquarters for the publicly owned GB Energy. Plus, global stocks soar as China unveils a surprise stimulus package to boost its economy. Hi there, very good afternoon to you. You're watching Business Live with me, Emma Crosby. Sir Keir Starmer has promised to take what he's called tough decisions in order to achieve economic growth, possibly paving the way for spending restraint and tax increases. The Prime Minister told the Labour Party conference in Liverpool this afternoon that the coming months would be hard because of what he called the financial black hole and £22 billion of hidden, unfunded Conservative spending commitments. On the positive side, Sir Keir listed the government's achievements, including reforming planning and ending the doctors' strike. Well, live now to Liverpool, let's speak to our political correspondent, Tamara Cohen. Tamara, good to have you on the programme this afternoon. The message seems to be short-term pain for long-term gain, but pretty light on detail because of the budget next month. So what message do you think Sir Keir is trying to send to the UK business community?
Absolutely, that it will be a hard road ahead, but the prize on the horizon will be worth it. He was trying very much to paint, I thought, the destination a bit more. He said that the hard work has begun, changing the planning system, looking at renewable energy, skills, workers' rights. All of these things have been started. They will pay off in years to come, and I think he was trying to say to business that he is going to stay the course and that higher economic growth, he said, is the driving purpose of this government. As to those tough decisions along the way, I think he was pretty clear that the winter fuel policy has not pleased everyone, but he's sticking with it, and he hinted at more tough decisions on the way, possibly as soon as next month's budget. There was an interesting line in his speech where he said, just because we all want low taxes and good public services doesn't mean the iron law of properly funding policies can be ignored, because it can't. Basically, if you want better funded public services, you have to pay for them, and I think that was a very clear signal of where things are going. I think the CBI at least thought there was something to celebrate in what he said about being a reforming government, because there aren't big reserves of cash. They said it seemed to be a rallying call for innovation and investment by businesses. He talked about Labour working hand in hand with businesses, not an uncontrolled market, as he said, as there had been in the past, but working hand in hand to address their concerns. There weren't that many specifics, but he did talk about reforming apprenticeships and making sure that they are more focused on training and the needs of those people the businesses want to take on. So I think there could be more detail fleshed out there. But on a lot of issues, including capital spending on things like the new house building programme, it was more aspiration. But I think there was an attempt there to paint the sunlit uplands, but they are, he pointed out, very far into the future and will involve a lot of tough decisions along the way.
OK, Tamara, for now, thank you so much. Well, one of the big announcements in the PM's speech was that Great British Energy, that's the government's new publicly owned energy investment company, will be based in Aberdeen. Our Scotland correspondent, Conor Gillis, has been getting reaction there.
Good afternoon from the wettest part of the UK here in Aberdeen this afternoon. Look, there's been a right song and dance around GB Energy and the announcement, this proposition of jobs being dangled in this part of the world. We knew that GB Energy was going to be headquartered in Scotland. That was well trailed during the general election campaign from the now Prime Minister. And there had been some suggestion that the northeast of Scotland, the oil and gas capital of of Europe, would be the headquarters, would be the base for this, and today came that confirmation. So I think there is a huge sigh of relief. Business leaders here reacting in the past few minutes, saying this is fantastic news. They are saying 1,000 companies in this part of Scotland alone rely on this sector, rely on oil and gas, and clearly the renewables of the future. And they are saying that this is an area with high-skilled workers and clearly a great place for GB Energy to be based in. But let's not forget there is politics clearly at play in all of this as well. Labour, unlike the Conservatives during the election campaign, were not in favour of new oil and gas licences. So some experts here have said that you cannot kill off one industry and replace it with another. The two can go hand in hand. And they are saying that there are 100,000 jobs at risk. So clearly Labour were under pressure to perform here. They did not do well in the general election here in Aberdeen and the northeast of Scotland. So that will have been a factor in all of this. Clearly a welcome move today, but many people across the whole of the UK, consumers in particular, will be wondering if GB Energy will bring down those energy bills that we're all paying on a monthly cost that are due to go up again in October. And if so, when will that happen? Those are the big questions lingering over not just this part of Scotland, but across the whole of the UK today.
Soggy Aberdeen a short while ago. Well, let's continue with our business coverage and business reaction to that speech that we had from Sir Keir a short while ago and speak to Craig Beaumont. He is Head of Public Affairs at the Federation of Small Businesses. Good to have you on the programme. Sir Keir wanting to set out Labour's plans for a national renewal. Did he convince you and your members, do you think?
Well, I think it was a very confident speech, and throughout he kept coming back to this driving purpose, as your correspondent just said, about driving purpose being economic growth. So we know that you can't get economic growth without small businesses doing well, and he even spoke about small business owners as the backbone of Britain. So that's really good. And I love your focus on the Aberdeen story with GB Energy. We've spoken to our colleagues in FSB Scotland who are really, really pleased about members in Scotland who will be getting some benefit, perhaps amongst those 1,000 companies. But there was high streets in there and the revitalising those. There was stuff about the planning system and housing, and you need small house builders to build those. And then finally, there was stuff about people, which was really important. The apprenticeships change, which protects the apprenticeship system, but also makes it much better with a focus on young people and foundational apprenticeships. So there was quite a bit in there in the end.
Lots of good news, but probably good news for the future. There certainly is going to be some short-term pain, that's for sure. And we heard that again with Rachel Reeves, the Chancellor, yesterday, talking about the need to prioritise filling this £22 billion black hole. And Keir Starmer going further, as Tamara said a minute ago, that the iron law of properly funded policies can't be ignored. Do you think that's the right strategy, to deal with this first before we get the jam tomorrow?
Well, I mean, the budget will be the moment where they've got to work out what the public finances are. But we've supposedly got the most pro-growth Treasury we've ever seen. That's what Rachel Reeves said. And there were some reforms announced yesterday. She said it was the most pro-growth Treasury that people have ever seen. Now, to deliver that, you've got a Treasury focused on the budget, which can't just be about pain. It has to be about gain. It has to be about how do you get growth. So we're looking for big announcements in the budget on things like employment, which is really important to get right. It can't just be the make, work, pay agenda. It needs to be about creating jobs. And also it has to be about self-employment, increasing those of us who want to set up in business and do startups and get excited about the economy. So we think there will be jam, but there needs to be a more reasonable approach to what that budget will achieve, and it can't be just doom and gloom.
We know that there's going to be more fiscal prudence in the budget at the end of October. That's probably, for you and me, tax rises. I mean, do your members have anything more to give? Small businesses are tight as it is. Is there anything else in the purse for them to give?
Well, I mean, costs are really high in small business owners. They keep on telling us employment costs are up, tax costs are up, business rates are really high. So there are certain decisions the budget needs to take. Now, if you accept that economic growth is the primary purpose of this government and that everything else it wants to do must stem from that, then absolutely right. Right the ship on your public finances. But what is the government there to do? And all these activities rest on getting economic growth. So we think there should be some good things in there about helping to fund better, much more employment, stuff that are to do with getting money into small businesses, like tackling late payments, which we've got agreement this week from Johnny Reynolds as well as Rachel Reeves and Keir Starmer. So there's enough there, I think, for small business owners to watch and go, well, there is some stuff coming. And now the key is, how will they deliver it? And on 30th of October, they're going to be looking really closely.
And how will they pay for it, Craig? I mean, that's the big question, isn't it? What ideas do you have?
Well, they need to pay for it through economic growth, because otherwise they can't do any of the stuff they want to do.
But how are they going to fund that growth? I mean, for example, I'm sorry to interrupt, but would you be comfortable with Rachel Reeves maybe changing the rules when it comes to borrowing more?
Well, if it comes down to looking at personal guarantees and therefore helping small businesses access finance, that doesn't cost anything. If it's about late payments, getting small businesses paid more quickly, that means they're not chasing invoices, they get more money, they can grow. So there's all sorts of ways you can do stuff that doesn't actually have a huge price tag, and that's really important, I think, not to go in with massive asks that cost lots of money. So there are ways to do it, and I think small business owners will be looking for that. It cannot just be about spreading tax rises across everyone, and I don't think they will do that. They will look at how do they make the tax increases that they need to, and who will be targeted for those. And I really, really hope they don't tackle and target small business owners, and I don't believe they will.
It was really interesting when Sir Keir said that people in the country are exhausted with politics. Do you think the business community feel like that?
I think they're tired of political turmoil. So, I think a lot of people put a lot of money on the word certainty and making sure everything is straightforward and everything is predictable. But I think entrepreneurs move quickly and can adapt fast as well. So getting rid of some of the political turmoil, having a government that has a plan, and the plan's not there yet. There's no industrial strategy, there's no growth plan yet, but we're getting signals of what will be in it. So the next month, I'd say, is crucial to get those plans. And then I think businesses will be looking at going, this is a government that means what it says. It will get economic growth, off it goes. Now, if the plan isn't quite good enough, then we hope to improve it and make sure it gets there.
And how are you doing that? I mean, one of your jobs is to talk to the government and those inside the Treasury. How much contact do you have with them these days?
It's huge. I've been really shocked by kind of how big the scale of that engagement has been. And it's not consultation, it's about engagement. So we're getting in to see Rachel Reeves, Keir, and to see Angela, to see Johnny, the small business minister as well, and then loads and loads of officials in each of the major departments. And it's been all-encompassing. And at the moment, it's just engagement. What do you want from the budget? What are you asking for? If we were to do this, what do you think? So at the moment, it's very preparatory stuff, but it's huge. And we hope that that continues. And it builds on our work with Labour in opposition, where they banked quite a lot of our policies, which were in the manifesto, that are now being delivered, hopefully, on the 30th of October.
I mean, you're on first-name terms with a lot of them, it seems. Just quickly, Craig, how important is a rate cut for your members if we get one in November, and maybe as much as 50 basis points from the Bank of England?
So, we picked up in the first, the big credit crunch in 2008 and 2009. It was the interest rates that were the real killer. So business owners trying to mortgage for their businesses or their homes were suddenly paying a lot more. So we are hopeful to see a gradual decline in interest rates over the next few months. What Andrew Bailey said was the hint that there would be that is good. But what you don't want to do is always this promise of lowering interest rates at some point, but not actually doing it. So it may not come in November, but we're hoping that by the start of the new year, we will start to see lower interest rates. And that means small businesses can borrow more easily. And if they've got the fiscal environment right and they've got the government environment right, they can look to how they can expand and grow. And that's the dream. If we can get that right, the economy will start to really motor in the spring.
We'll leave it there. Thank you so much for coming on. Craig Beaumont, the Head of Public Affairs at the Federation of Small Businesses. Well, let's just move away from our business coverage and bring you the very latest that's coming into us from the Middle East. And we're hearing that the Israeli Prime Minister Benjamin Netanyahu has said that Israel will continue to strike Hezbollah. Speaking at an IDF intelligence base this afternoon, he said, "We will continue striking Hezbollah. Whoever has a missile in the living room or a rocket in the garage will no longer have a home." He goes on to say, "I say to the people of Lebanon, our war is not with you. Our war is with Hezbollah. Nasrallah is leading you to the edge of the abyss." And we will bring you more coverage from the Middle East as and when we get it. In the meantime, our other main business stories for you this afternoon. The markets are soaring in Asia and Europe following a surprise raft of stimulus measures announced in China. China's central bank cut the requirement for bank reserves and also slashed interest rates on its loans to commercial banks. The move is designed to address the severe property market slump in China and weakening consumer demand. The travel group TUI says it's on track for its annual earnings to rise by at least a quarter as people continue to prioritise holiday spending. The German company reported a rise in summer bookings of 6% and an increase of 7% into winter holiday reservations. Still to come this afternoon here on Business Live, we'll have a look at how those markets are faring this afternoon. It's been a lively session. Do stay tuned.
I think all of those people who are criticising and carping, especially those who are carping about their pay levels, really should absolutely shut up. And I do think there is something about an older woman in a position of authority that some young men find hard to take. So, you know.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts, watching us live.
I'm live in Jerusalem.
Wherever you get your podcast.
All in one place and all at just the touch of a screen. The Sky News app. Get the full story first.
I'm David Blevins, and I'm Sky's senior Ireland correspondent. Politically, the two sides are as far apart as ever, and it's over that question of who has sovereignty in Northern Ireland, the very issue that's been the source of tension here for generations. I've spent 25 years reporting the journey from conflict to peace.
The political parties of Northern Ireland have reached agreement.
We already know what the government gets out of this deal. What exactly does the DUP get out of it? Well, £1.5 billion. If there's anyone who might know how to fix Northern Ireland's devolved government, it's the American architect.
Changes in circumstance require changes in approach.
If we both contract COVID-19 and end up in hospital, religion's nothing.
If there's a hard border, I think it'll cripple the country.
Day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle.
Why only in America?
People want their country to work.
Just want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
I say, bring it on.
With America divided and tensions running high, get ready for an election like no other.
Join our teams as we follow the campaign trail as America decides.
We will win, win, win.
Get closer to the action this US election with full reaction and analysis.
Sky News, the full story first.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
You want to talk business? Meet me in the On-Board Lounge.
Fly Emirates, fly better.
You're back with Markets Live. Let's see how those markets are doing as the UK and European markets go into the close. In Europe, blue across the board, thanks to that surprise news from China overnight. You can see the German market, the French and the Spanish market all closing higher, albeit coming off those gains from earlier. In a bit more detail, let's have a look in London. The FTSE 100 finishing higher by just shy of 0.3%. That was thanks partly due to a really strong performance from the mining companies today. Have a look at this. The likes of Anglo-American, Antofagasta, Glencore and Rio Tinto all very much to the upside. Rio Tinto there higher by 4.5%. Anglo-Agasta actually up 6.5%. The blue chip gainers this afternoon include the likes of Standard Chartered, the big financial group, and also Prudential, after the company's chief risk and compliance officer acquired 235 shares, signalling confidence in the insurer's stock. We're also seeing to the upside the likes of Ocado and Man Group outside the FTSE 100. They both had a good day. As you see, they're trading higher by nearly 3.15% and 3.74% respectively. Not all good, though, to the downside. Smiths Group still struggling. It's down just over 5% right now after its full-year results disappointed some analysts this morning. That's also joined by Howden Joinery, currently trading lower by just over, or just under, I should say, 2%, down 1.43%. On to the markets. The pound has been really interesting today. It's continuing to strengthen against the dollar. It earlier hit a two-year high as well against the euro. Currently, it's just dipped lower against the euro, so crawling back some of those gains. But against the dollar, it still stands at 134. That's up nearly 0.2%. And as you can imagine, with what's happening in Lebanon and Israel right now, all eyes still on the oil market. Rising tension in the Middle East do tend to affect the price of oil. A barrel of Brent crude currently setting you back nearly $75. That's up 1.22%. Try and make some sense of all this now. Lucy Coutts, from Investment Director at JM Fin, joins us now. And great to have you on the programme this hour, Lucy. I want to talk to you about the US markets, just sitting near those record highs. Another very strong day for stocks. What do you make of it?
Well, this is not really on the back. I mean, if we go back to last week when the Fed cut rates, and that gave China the opportunity to put in some pretty aggressive stimulus to its own markets. There's sort of alarm among the Chinese government where we've got sort of slowing growth and really dampened consumer sentiment. So they're allowing brokers and funds to tap liquidity from the central bank for about $113 billion initially, dollars. And similarly for the housing market, they're reducing mortgage rates and lending rates. And that is substantial because there are issues within the Chinese property market. So they're cutting rates by $5.3 trillion. So it is significant. And then we're also having sort of soft news from Fed officials in the States where there is an absolute absence of any sort of neutral stance at the next meeting, and it's all about the rate of cuts. So it's the number of cuts that we can expect over the next sort of 12 or 18 months, or whether the next cut may be another 50 basis points. But the emphasis is certainly that the labour market is weakening, but it certainly isn't weak. So there's a lot of positive noise really coming from both, well, the two largest economies.
Yeah, let's look at China in a bit more detail because it took a lot of people by surprise today, even though the Chinese economy has been lacklustre, to say the least, for a long time now. So why now, do you think? And what impact could this have on the global economy?
Well, I think it is on the back of the Fed cutting rates. It's given them that room to move because obviously they've got a currency problem as well, and they didn't want to put the currency at risk. So with the cut coming from the US first, that's given them some wiggle room. But this is substantial. This is the greatest stimulus that they've given to the economy since 2008, and the numbers are quite staggering. I mean, long term, they need to sort the property out, which is why that's where the biggest cuts have come from. But I'm not quite sure that it's gone far enough. But at least it's a start. And then we've seen positive news. You sort of gave out the movements today in the mining stocks. And these are substantial moves. And this implies that we're going to see more steel demand for copper and iron ore from China as the economy there is stimulated by the cuts made today.
Yeah, we saw those big mining stocks doing very well on the London market this evening. And just going back to those comments you talked about from US Central Bank, or bankers, I should say, do they signal to you that more cuts are to come? And what impact could that have on stock markets around the world?
Yeah, I think there are more cuts to come. I mean, there are two camps. Is it going to be aggressive or is it going to be sort of softer? But we've got some core inflation data coming out from the US on Thursday. This is a measure that the Fed looks at very, very closely. And I think what we need to see is that inflation is neutral, it's coming down and it's steady, that the interest rate hikes have done their job. But what they have to manage is this weaker labour market, and that is the concern. If they get this right, it means the US will either avoid, I hope, a recession, or if it does have a recession, it'll be very short. It might be one quarter. And so this is what markets are really trying to read into this. Certainly, I think Q4, which we're about to enter, should be a positive environment for equities. We see the economy generally doing quite well.
Sorry to push you, just a couple more minutes left, if that. What else have you been looking at today that's caught your eye in terms of individual stocks?
Well, individual stocks, I mean, a great story from Raspberry Pi, which it came to the market in June. It's a single board computer, and it's come out with some great results. And first half results, it's maiden results, it's done what it promised. It gives investors confidence for the full year. So it's a great story, and the shares are IPO'd in June at 280p and they're now 379p. So a really good investment for those who back them.
And Card Factory, in a word, not so good.
Less good. I mean, actually, the sales are up, but their profits are down, basically on staff costs. And cards, they're relatively cheap. They're price sensitive to any rise in fixed costs.
We'll leave it there, Lucy. Thank you so much for joining us. That's it from me. I'm back again with Business Live tomorrow morning, 11:30, with all your business news. Do join us then. In the meantime, though, coming up next, it is the News Hour with Saima Mohsin here in London, as we hear in the last few minutes that the Israeli Prime Minister Benjamin Netanyahu has said that Israel will continue to strike Hezbollah. The very latest on the situation in the Middle East coming up here on Sky News at the top of the hour. I'll see you tomorrow at 11:30.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday.
I'm ready. Are you?